Hello, very warm welcome. You're watching the weekly edition of Your Trades. This is Priyanka Uppal along with me, Sneha. Snehi, this entire week has to be called for sector-specific, stock-specific. Because if you see the range for Nifty, Bank Nifty and even for broader market, it was very well narrow. Nifty gained nearly 1% of gains this week. Broader market, in fact, gained very marginally. It was more or less because of the SEBI action on the probable action on the mid-cap and the small-cap counters. But then sector-specific, stock-specific moves were massive. Leading sectors, FMCG gained this week the most, nearly 3.5%, followed by IT space. Of course, IT TCS reported a beat in June quarter and also coupled with the US economy cooling off further. Now that has cemented the hopes for further rate cuts. But then yes, the kind of numbers TCS has posted. Today, the top 5 counters on Nifty was from IT pack only. And now more large cap earnings are on tap with different counters from the IT space clearly. Auto sector was the second sector which was in focus, and especially M&M like counters which were on the that was a top losing stock for the Nifty for this whole week. Company announced a price cut in SUV segment that did not go well. That was actually seen as a sign of slowdown in retail category by investors on the street. And we saw that many other car makers like Hyundai, Tata Motors, they also slashed price. So there was some bit of concern despite their clarification. It did not help. But standout gainers were clearly from oil and gas pack. You talk about ONGC, Oil India, OMC counters. They were all they were all over the moon on the back of multiple news here. Of course, one of the comment by oil minister on $100 billion opportunity, that was one positive trigger. Oil India itself was nearly 14% up in the last 2 days, today and yesterday. Also, there are talks between JV proposal between Shipping Ministry and Oil India, SCI and Oil India. That also helped soar the counter higher. But then a couple of budget stocks, which were gaining. You talk about railway in anticipation of the larger budgetary allocation. Many stocks we saw gaining higher, and especially stocks like RVNL. Shipping stocks were also up. In fact, many stocks were gaining today also, Snehi. Did you tap any of the shipping counter?
Absolutely, and lots of shipping counters are gaining in trade Friday and started gaining ever since markets on Thursday, because there was some news coming in, and we have exclusive details on that the shipping ministry has submitted a proposal to the finance ministry. Government is likely to make some announcement which will boost this sector. There is some large amount of inflows that are also expected to get into the shipping sector in terms of investment from the government. So names like you had Cochin Shipyard, you have Garden Reach, you had Shreyas Shipbuilders. All of these stocks have done pretty well over the last couple of trading sessions. So big moves coming over there as well. And another buzz maker news maker, another buzzer over the course of the week has been Raymond, because over the course of this week, Raymond has traded X demerger, stock splitting into 3 different companies. One will be the lifestyle business, one will be the real estate business, and then you have the engineering and defense business. So Raymond also splitting X demerger is big news of the week. And over and above, you also have some important cues to watch out for next week on the macroeconomic front. You have China GDP, UK CPI, lots of important cues to watch out for as well. And like Priyanka mentioned, auto companies were the big buzzers over the course of the week, because you had M&M, Tata Motors, and then you also had unlisted Hyundai. Remember, Hyundai also coming out with its IPO soon. All 3 of these companies have slashed price, and of course, Maruti Suzuki was a buzz over the reason of the UP hybrid vehicle loan waiver coming in. So lots happening over the course of the week. Lots to watch out next week as well. But on that note, let me welcome our guests on the show today. We have Vinit Bolinjkar joining us as of now, Head of Research at Ventura Securities. Vinit, thank you so much for taking the time out and joining out. And I want to ask you about, first up, I want to ask you about your earnings outlook, because now that TCS has kick-started the earnings season, give us a generic view on what you make of this quarter that has gone by, because we did have some headwinds coming by. You had a heat wave, you had elections, so lots was happening in this quarter as well. So give us a generic view and also give us your specific view on what IT companies are expected to do and how their numbers are expected to look, given TCS has come out with a stellar set of numbers. Vinit, I believe you are on mute.
if you notice, TCS and Tata LIC came out with numbers a few days back. You'll notice that the numbers were slightly lower than what they were reported, in the previous quarters. But the growth trajectory with which both the companies have guided for is very, very resoundingly strong, and the pipeline also seems to be improving and getting better. So we earlier were very negative on IT stocks, and here we are, elevating them to a accumulate kind of a position. And we believe that the numbers, if they pan out the way they have been mentioned, if Infi is able to do 6% growth QOQ, then we are looking at potentially 20 to 25% top line growth. And that will obviously flow into the bottom line because their additions to employee count has also gone up. So obviously it's in line with their anticipation that the order book will translate into revenues. So I think from here onwards, I think IT stocks can be considered to be a tactical buy more than a portfolio bet. And we believe that these counters can give you 20 to 25% upside in the coming year. Regarding the other stocks that are there, we are quite sanguine on FMCG, consumption, pharma, and engineering stocks. We believe that the stocks which belong to the zooming sectors, which are defense, railways, and the other sectors, we think that they will kind of have to temper their rally because they've run up too far too fast, and the numbers on the results might not be as resounding as the prices are foretelling us.
All right, Vinit, interesting you coming in. The way you expressed your views on IT space, do it looks like that, there's a strong case now that more flows can come into emerging markets amid expectation of rate cut in US and of course the kind of weakness we've seen in dollar index. Spaces like, of course, there are multiple spaces because of budgetary allocation expectation from budget. They have been buzzing from last 2 weeks only. But then is there a margin of safety or maybe a kind of rotation if it has to happen? Will that be IT space majorly? Metals can also take front seat. There's weakness in dollar index also.
Yeah, we believe that with a declining dollar, the money is definitely going to flow towards the EMs. India is going to be one of the top places where the EM money will flow. And IT stocks, metals, textiles will also should catch up on the boom because we are expecting some more allocations to come in the budget. And a lot of the export stories, there are certain segments which have not caught fire yet, but which are primed well for, long-term export growth stories like leather, footwear, consumer durables, and also the electric cables. We believe that, all these businesses are going to see significant traction in terms of export volumes and revenues. And they themselves are going to become very large contributors to the company's bottom line as well as the top line. And we are quite bullish on these spaces.
Thanks for the view coming in, Vinit. We also have Rajesh Palviya of Axis Securities on board now. Rajesh, hi, thanks so much for joining us on the show. I want to come to you first, and I'm going to ask you two questions here. One is on Nifty, because 24,500, over the beginning of the week, these levels seemed difficult to reach, but now see where we've closed for the week. So, first question to you is, do you think this rally that we've seen is sustainable going before the budget? Do you think we could see these kind of moves leading all the way to the budget? And second, I also want to get your view on what Nifty IT is doing, because it's at a 4-month high this week. So what are your levels that you're watching out for both Nifty as well as Nifty IT?
So Sneh, yes, we believe that this momentum can extend further towards the budget. The way short covering action has been there in most of the call writers for 24,500, 550, even 600 strike. So that clearly showing us that these really can extend further, and possibly we may see a target towards 24,800 to 25,000 also ahead of budget. So because whatever minor dip which we have witnessed in this week, that was again, the fresh buying action has been there in the market, and only we have seen a 200 point kind of dip in the market, and then again now we are back to all-time high trajectory for the Nifty. So the way broader market is participating, sectoral rotation is happening. Now the IT is on the front seat for this rally. So I think the way market is doing the sector rotation, that clearly giving us confidence that ahead of budget, maybe we can see a further higher level towards 25,000 level also. So I think one should remain on the long side of trade. 24,300 should be your stop loss at this moment. Though Bank Nifty is not participating in this rally, there is some pressure from some of the large cap bank, but still the way Bank Nifty is also managed to close above 52,000 mark. We believe that if it's hold 52,000 mark, then possible buying interest would be there in banking stocks also going forward, and then there would be contribution from banking space also in coming days, and possible target we can see for Bank Nifty towards 52,800 to 53,000. So at this moment, the Bank Nifty may remain show some consolidation, and possible stop loss to remain long would be around 51,800 to hold long position in Bank Nifty. Now moving to the Nifty IT, very strong momentum in Nifty IT, especially in today's session post TCS number. The way most of the large cap as well as the mid cap stocks have moved up in Nifty IT pack, we believe that here there is a furthermore upside we can see. Looking at the levels on Nifty IT, now Nifty IT managed to give breakout above its previous swing high of Feb 2024. So looking at the structure now, we believe that till now Bank Nifty IT holds about 38,500 mark. There is a high possibility that here we can see furthermore upside toward 39,500 to 39,700. The way TCS, Infosys, Wipro managed to give breakout on their near-term consolidation range. So we believe that large cap IT stocks can also contribute furthermore. So TCS would be our choice. Then Infosys is the second choice to buy from large cap IT. And from mid cap IT, I think Coforge is looking very promising. I think we have discussed earlier also for Coforge. Here we are bullish, and we believe that Coforge can also show furthermore upside. 6,200 to 6,300 would be the next target for Coforge. So one can look to buy this stock with stop loss of 5,800, and another stock that we like from mid cap IT, that is Birlasoft. Again, stock now managing to give breakout of last 4-week consolidation. So Birlasoft can be a stock where one can focus for upside target of 765 to 770. Your stop loss should be placed at around 710.
All right. Okay. Rajesh, seems you were in a hurry. You've given answers to at least 2-3 questions in one go only. But stay with us, Vinit and Rajesh. We'll be right back after a short break.
Hi there, welcome back. You're still watching Your Trades on ET. Now let's keep it going with what this week shaped up to be like and what we can expect from the week ahead. Let's bring back on board our experts today, Rajesh as well as Vinit. And Vinit, I'm going to come back to you. Let's talk a little bit about the auto sector, because lots of momentum seen in this sector, lots of news that poured in and trickled in for this sector. You had Maruti on one hand that did phenomenally. On the flip side, you had some negative news coming in for the likes of Tata Motors and Mahindra on the back of those price cuts. In the longer term, while M&M has clarified that this is just their celebratory offer, in the longer term, what do you think the impact of these price cuts could be on the entire auto sector? Because if you take a look at the performance over the last week, auto has ended with a cut of 1%. So what are you penciling in for this sector, and individually for these companies also, how do you see this price cut panning out?
So I believe that the price cuts could impact the EBITDA margins materially, given that you have done your calculations based on certain assumptions. Second is what we feel that Maruti could see an extraordinary volume growth, given that the hybrid vehicles are going to be their outlook for the future, and other players don't have that product offering as yet in the kitty, and they need to work speedily on that. So I think that for the next couple of quarters, Maruti might outperform the other PV manufacturers and SUV manufacturers going ahead. But given that, I think the ancillaries or the or auto ancillaries should do very well going ahead. JNA Axles, which recently reported their numbers, have seen a stellar jump in EBITDA margins by 400 bips, leading to 60% growth in EBITDA compared to the top line. So I believe that auto ancillaries may be a better way to play the auto sector than the auto majors themselves.
All right, auto ancillary would be in focus the way it had been in past weeks also. Rajesh, but what we saw in the broader market that closed with marginal gains only. Mid cap and small cap, they both closed less than 0.5% this whole week. And a lot of buzz was around SBI, SEBI tightening. SEBI could possibly take a tighter action on option trading. There could some amendments in FNO stocks margin could come. A lot of buzz doing arounds, but then at the same time we've seen some standout gainers also from broader markets only. How should one approach stock like very specific stocks like GE Shipping or RVNL or Oil India? One should hold on. What is that? Of course, all of them are not in futures and option, but then stocks like at least Oil India. How should one approach now?
So Priyanka, very strong momentum is going on in oil India. Though the whole sector is also showing good buying interest from oil and gas sector. So Oil India is one of the stock where we are seeing again an all-time high trajectory. So looking at the structure, I think till stock is holding above 570, 560 zone on a closing basis, I think one should remain on the long side of trade. Possibly really can extend further, and we hold our bullish view for this stock. Oil India can continue furthermore upside. Positionally, we are projecting target towards 700 also for Oil India. So buy on dips is the strategy, though stock has already moved up. So if you get any opportunity in decline, you can buy and accumulate. Your stop loss should be placed at around 560 kind of zone to buy and accumulate Oil India.
So that's a strategy coming in for Oil India at least. But Rajesh, while you're with us, also tell us what the stocks you have picked to discuss and advise to our viewers, and how to navigate those stocks over the course of the next trading week.
So I believe that firm really can extend in pharma space, and we believe that pharma space, the way most of the pharma stocks have shown buying interest in last couple of days, that clearly giving a sign that here we can see a rally. Dr. Reddy's buy. The way stock has closed this week, very strong bullish candle on weekly chart, long built up is there on a derivative data. We are projecting target towards 6850 to 6900 for Dr. Reddy. Keep your stop loss to buy this stock around 6660. The second stock that we like is from FMCG pack, that is Britannia. Most of the FMCG stocks have also done well in last couple of weeks. The way Britannia managed to give breakout of its previous swing high. Here is a potential, very strong weekly bullish candle. Here is a potential to continue furthermore upside. 5940 would be the next target for the stock. One can buy this stock with stop loss of 5720.
These are the two recommendations coming both from the defensive space, Britannia, and the other one, Dr. Reddy's. Vinit, very quickly, which sectors in terms of earnings are on your tab?
So, as a house, we are bottom up. So I will tell you the stocks that we like. We are quite constructive on Shelby Hospitals. We think the stock can do $500 in the next couple of years from the current levels. We like NTPC. We believe that NTPC's once the NTPC Green IPO comes in, there should be some significant re-rating of the stock happening, considering that they're coming out with their IPO, and we have a 33% upside on that. We like Senco Gold. We think there's a 50% upside on this. And we are also quite sanguine on Wokhard, where we believe that we can see outsized disproportionate returns given the fact that their WCK 5222, which is the molecule that they've recently introduced, once it goes into commercial production, we believe that they will see some significant upside coming from that, and we expect the stock to double from current levels.
So expecting Wokha to double from current levels, very interesting take coming in. Vinny, thanks for sharing your picks and the stocks that you are liking amid all of this earning exuberance we're seeing. But on that note, gentlemen, I'll thank you, and that's all the time we had with this discussion. So Rajesh, Vinny, thank you so much for joining us. I'll let you go on that note. Moving on, let's talk about the budget, because that's the next a big event that the market is penciling in, and with the budget just days away, all eyes will be on FM Sitaraman and whether her budget will deliver on stakeholder expectations. Targeted spending, infrastructure revamp, all of these agendas are on the anvil. So we've lined up expectations from some key voices, some key market voices. Let's go across, hear out views from Sridhar Shivaram as well as Manish Sonthalia.
I think everybody, including SEBI, Reserve Bank and the Finance Ministry, is worried about the options and futures volumes, and I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. We could see some bit of reduction in taxation for the middle class. There could be some, schemes for subsidy or something of that sort.
Realistic expectations on the real GDP growth translating into revenue growth, which will be reasonable. I think FRBM targets and some stiff targets to be set for FY26. For FY25, we are working with 5.8%. I hope this glide path to lower down sharply to around 5.1% in the next 1 year. Impetus on, balance sheet expenditure of the government to, accelerate infra spending. Middle class, if there was not to be too much of tinkering in direct taxes, that would alleviate a lot of pain, and some additional allowances on the personal income tax, the plus rationalization of GST on a few items.
And that's the expectation bites that you're hearing from the big market experts. But then next week is a truncated week, but a couple of blockbuster earnings are on the tap. That's all in this edition of weekly edition of Your Trades. Thanks so much for watching.